Hi fools, welcome to another Ask a Foolish Question video. I'm Sonia Rahal and with me is Maynard Paton. Welcome. Hello. Maynard.
Thank you, Sonia.
So Maynard is here today to answer a reader's question about whether or not she should include a small cap company in her beginner's portfolio. The question is from Emily. She has been investing for around 3 years now, Maynard.
Okay.
And she has lined her portfolio with some solid dividend paying blue chip companies, and now wants to include some fast growing companies in her portfolio. Is that a good idea, and what should she look for?
I think it's a good idea. I'm a big fan of small caps. I think they offer larger potential for growth, but they do come with greater risks. So Emily has to bear that in mind. I think when we think of smaller companies, we all think of big winners from the resources sector, oil shares which found oil, gold mining shares which found gold, biotech shares and tech shares which have their share prices have multiplied fantastically. But I think for most people, just looking at ordinary smaller companies can do very well too. Those sort of shares can do very well. Textbook example really is Domino's Pizza. For years this business has grown at sort of 10-20% a year.
Wow.
The shares are up about 15 times in the last 10 years, and all that's come from is just selling takeaway pizza. So nice straightforward business. Another example is James Halstead, which sells floor coverings for hospitals and schools. Sounds really dull. Their share price is up 10 times on the AIM market as well in the last 10 years. Okay,
so what other criteria should Emily be looking at when she's looking at those small cap markets?
My golden rule really is to sort of minimize the downside. So I'm always looking to not looking at the upside. I'm just trying to rule out mistakes. And with smaller companies, I'm always looking for cash on the balance sheet and little debt. Debt is a real killer for small caps in difficult economic times. Also looking for companies which are growing organically, so we're not dependent on acquisitions and buying somebody else's business.
Okay. Brilliant. There's some really important points there, Maynard, that you made. Anything else?
Management.
Yes.
If one thing I always look for is management of smaller companies. With blue chip companies, you tend to get what I call fat cat, hide hands. Are they really on your side? I'm not so sure. With smaller companies, you often find management with large shareholdings, which are on your side. And a little trick I use is to always compare their dividend payments, how much the management receive in dividends every year compared to their pay. Always like management where they have a large dividend income, because it just seems to me that they'll be on your side as an ordinary shareholder.
Absolutely, absolutely. Well, thank you very much, Maynard. Some really good pointers there.
Thank you.
So Emily and anybody else watching, things that you should look at if you're looking to invest in the small cap market. Look at the financials, do your own research, check out the management, and definitely look at what's happening on the downside there.
Yeah.
Brilliant. Thanks for watching. If you have a question that you'd like to include next time, please email foolishquestions@fool.co.uk. Thanks.